We are back to close out a wild week in the markets. We're going to be discussing Jerome Powell's presser on Wednesday, as well as the Fed rate decision, the crypto market pumping, the equity market looking a little more cautious, and much more today on Money Never Sleeps.
Wi-Fi, man.
God bless it. All right. I guess the intro video is fucking done. I don't know. Welcome back to Money Never Sleeps. Do us a favor as we get started. Hit that like button, subscribe to the channel. We clearly need to monetize in some way so I can pay for better internet or a new computer or something. But also remember, nothing Kevin or I say is financial advice. Kev, we had to miss Wednesday. We are back to close out the week. We had the Fed choosing not to do anything with rates. That was the expectation on Monday. Not surprising there. The markets were a little hesitant the rest of the day, and then yesterday we saw things absolutely rip, especially on the crypto side. I mean, Bitcoin back over 100K, squarely in the 103 range right now. ETH is on a mega pump at the moment. Like that's absolutely ripped the last few days, up back into the 2,300 range. Solana back over 170. A lot. The crypto and stock markets are sending and bond markets are sending very different signals right now.
Absolutely.
And I think it's because of kind of the state of those markets independently. So we'll talk about that in a second. But how are you feeling today? What are you focused on as we close out an interesting week?
Yeah, this has been a very fun week. I'm very cautious. I think that goes without saying. I've been talking about things just looking like looks like we're stretching things a little bit here. And like you said, the three markets are doing absolutely different things here. And we're also hearing very different word from the top, the administration and also Powell, that kind of complicates what direction or which market is right. I honestly think all of them are pretty much wrong right now, but we'll take a look at that. Other than that, though, there's so much that we can cover today. We got GameStop that we got to talk about. We got Farcoin that we got to talk about. I think that's just what I'm excited about talking. These are two things that I didn't think were going to be on our slate for 2025, being the most bullish asset classes out there. But, there's just some good things going on there, and we'll talk about that in a little bit. But, wherever you want to start, I'm game.
Let's start kind of bigger picture. So we got news on Thursday that Trump and the U.S. has reached a deal with United Kingdom on trade, and that there's going to be a meeting this Saturday in Switzerland between the U.S. and China regarding tariffs. So that led to some excitement there. On the crypto side of things, particularly, we also saw, multiple states pass legislation this week to begin creating their own strategic Bitcoin reserves. I think that definitely created more excitement in crypto. And then Ethereum went through another upgrade, first one in a little while here. I think that also led to a little more bullishness around Ethereum, that blockchain, what they're building, how it's going to be used. So there's been a lot of bullish catalysts in the crypto market. Meanwhile, on the stock side of things, it's pretty flat right now. And there's a much more cautious approach to it, with earnings. I guess that is that's a feather in the cap on the crypto side, is like, you don't need to worry about, earnings and tariffs in regards to crypto. Like Bitcoin, you're not going to have a tariff on Bitcoin. Somewhat,
for sure.
Yes.
Yeah. I just mean like MicroStrategy. That's the only one that got to be
careful.
Yeah.
I mean, to an extent, like, if tariffs impact inflation, that's going to impact rates, that's going to impact borrowing, and that's going to impact the price of Bitcoin. But it's been a much more bullish environment for crypto this week because so many companies are really concerned with what is going to happen with earnings. Like this administration, like reaching a deal with the UK, that's great. Like the progress with China is great. And if Trump pulls this off, I have no problem like saying that like, hey, this was a hell of a move. The guy did it. But there's like a lot of these bigger companies are still understandably very cautious right now because a deal could be near, but all of a sudden something changes that's off the table. The market is going to react to it. So I'm not trying to piss on anyone's parade because I've been enjoying the last couple of days.
For sure.
I'm feeling pretty good at the moment, but just trying to stay on our toes here of like, okay, we're moving in a good direction. If we can get, and like we had, the India-Pakistan situation continuing to, tensions there continuing to increase, bombings beginning, unfortunately. And so there's a lot of stuff out there that like, if news, we've had so much bad news for the last few months. Like if we can get a few weeks of like positive news, we can have a really, really nice pump here heading into the summer. I hope that's the case. I want to be optimistic that it is, but I'm also prepared for the chance that, at any moment things could begin to unwind.
I think it's the latter. Of any moment, anything can unwind. Just as you're talking to like the stuff that's going on in India and Pakistan, and arguably what's happening with China. If China during this deal this week says like, get the fuck out of here, get the fuck out of Switzerland, Vicent, which could happen, right? They could just hear him out and just say, yeah, no thanks. Then what if something happens in India and Pakistan? India obviously is a huge manufacturer as well of, a lot of imports into the United States, so they export to us. If shit goes wrong there, you might see a bit of a supply shock, which could also cause inflation in some regards, because then you're just relying on essentially Vietnam and a few other smaller countries, even some in Latin America, where it's like, oh shit, things are just going to get really expensive. So that's one thing that it's like, is it likely to happen? I don't know, but it's definitely something we have to keep in the back of our mind.
I think personally, real quick, yeah. I think Trump, he wants to book a win on this. And I think he's like getting them to the table was step one. I don't know how like severe he's going to be in negotiations, but I really think this administration wants to book a win at the moment because that would then, their thing is like, they want to get interest rates down. And getting some sort of like deal, even if it's not their ideal one, figured out, I think would help their case to pressure Powell more to cut rates at the June meeting. But that's just kind of my feel on the situation.
Yeah. And, that's actually really interesting too. I was thinking about it. Obviously, inflation's still an issue for the Fed, right? We saw from their rate decision, they're just saying that they could sit here, essentially the same speech that we've gotten for the past, 13, 14 months now. The thing that's really interesting to me is why the hell did we even cut in September then? Do you know what I mean? If we're not going to move on that, it seems very like that was, okay, we're going to try moving in the right direction, but then the tariffs complicated things. But also it could have just been like, it might have been a pre-election thing too. It's very possible that
well, and then like,
was. It's just weird to me now looking back at it in hindsight.
Yeah. Well, and like, I understand why they cut then. If they were going to make that move, I don't understand as much like why. So I understand why they cut in September.
Sure.
And I understand why they're not cutting now. But for them to not do anything between like the election and when he was sworn in kind of doesn't make as much sense. It's like, okay, if you thought it was moving in the right direction, like, because the tariffs didn't start till after he was sworn in, obviously. Like he had talked about them, but right. They didn't know how. And so maybe it was the uncertainty. I don't fucking know. I don't know. Yeah, Chris really Hoddle saying, why? Yeah, like it's the Fed has mismanaged a lot of things. That's for damn sure.
Every cycle too, right? The funny thing is, like I was talking to Chris about this. There will be no Ben Bernanke this time around. There's no Hank Paulson. It's Trump, 100%. It's these tariffs are going to be. If something happens in the market, it's 100%. The tariffs are going to get 100% of the blame. For the next two elections, the midterms and also the presidential. And you're probably going to hear about tariffs and how much of a fucking shit show they cause for the next, 20 years or so. But, this is like a game of chicken between Trump and Powell. And, him coming out and says he doesn't know, I don't know what he says. He didn't know the first thing about rate cuts or something like that on Twitter. I was like, that's crazy.
If it is a game of chicken between Trump and Powell, I would expect Powell to win that one because he ain't got shit to lose. Like he's going to finish. like Trump's certainly not going to bring him back as head of the Fed, so he might as well just like stand his ground, see this shit through, and then just ride off into the sunset.
Absolutely. What was I going to say? Let's get into the charts, because unless you want to talk about the FOMC anymore, I think we talked good about it though. Yeah,
it's the same shit every single time. Like
every
it's
single
just
fucking time. Let's pull up.
yeah.
I'm trying to think. What should we do first?
Let's get the boring stuff out of the way, and let's go bonds, and then the stock market. Give me a lead to see if POTUS can remove Powell. Yeah, neither outcome is good. Let's go with the boring ass bond market first, because we are seeing, last I saw there was a little bit of a sell off there. I don't know if it's people just getting into cash or trying to move, a little more risk on, but let's start with some of the bonds. We can move through that quickly, and then let's get into equities, and then let's get into crypto.
Absolutely. So this is the 30-year bond, right? We do know that over the week, the Fed has been buying, not QE, stealth QE, kind of. The fact that they're obviously adding stuff to their sheet. When will that hit the market? I don't know. I don't think it's going to be right away, but they have been buying the 30 years, so we're going to continue to monitor that. That's important. Meanwhile, with everything that Trump said yesterday about, you should buy everything, this thing's going to the moon, that really did kind of send a lot of the yields back higher, because people are like, oh shit, well, maybe this is risk on period, right? I don't know. It's going to be very interesting to see that. But I look at this 10-year, and this is the scenario that I think that we're heading towards. I think that we're going to trade back into this, but I think into the summer, along with some of those 30-year bonds that were being bought, kind of hinting at liquidity coming back into the market for a short period of time, the 10 years are probably going to go a lot higher. And this is going to be another problem that we just saw about a month ago. And we're seeing a very similar problem now. The yields are still going higher. People don't want to necessarily touch that. People are touching Bitcoin. They're touching, the equity markets. No one's necessarily buying up that U.S. debt. It's selling off. And we also have to remember, Japan is a huge holder of U.S. debt. They said that they were going to start selling some of it off if they needed to. Then they kind of walk those comments back. We'll see what they do. China is also another holder of U.S. debt. So it's going to be very interesting, again, with some of the trade negotiations that do happen, or if they don't happen. And then also how Forex will be put into this kind of, this weird place where if it moves one way or the other, the bond market's just going to absolutely either pump or dump, hard as can possibly be. So we look at some things here. This is the 10-year. Bollinger Bands, you can see that it's kind of closing in here. I think it's worse on some other things. Like, let me go to the weekly. On the weekly, you're not seeing it too much here, but I think this is a bullish move to the upside, which means it's bad for bonds if you're holding them. The yields are going to go up a lot higher. But if we look at, I think it was one of these charts. I think it's the 3-month. The 3-month is doing something very scary. I'm going to pull up the Bollinger Bands right now. Look how tight that is. That is extremely tight. The only time I think that we saw other moves like this, and this is from Finance Slide, he was talking about how it got really tight, was in February of 2020. And I think there was also one back here. Where are we? 2007, 2008. There's been some very weird times where you see the yields absolutely just collapse. So there's two scenarios that the bond market's telling me right now. It's either we're going to get liquidity coming in soon because something is about to happen in terms of volatility, and people are going to want to offload some of that short-term debt because they kind of need cash right now. That's kind of why we're seeing these massive spikes to the upside, and that might reverse at some point. The other thing, so that's the one thing where we're going to see some type of, say, flash crash in the equity market or the bond market in the near future. Obviously, OpEx next week, that kind of scares me. It could be on either side of that OpEx date. The other thing is, we could actually see the market just decline from here, and we don't have that sell-off in October like we expected, because the problems that are there that are kind of hidden are way worse than even anyone who watches this show can even expect. It's very possible that liquidity is in such a tight place, and with the interest rates remaining so stagnant. I mean, the fact that they're not cutting, and these tariffs are continue to put upward, price inflation onto consumers, and we're going to continue to see people being strapped, and we're seeing layoffs kind of come out. We're also going to get trade data very soon about the Port of LA, which is going to be very important. you might see this market just go to sub 5,000, and it might not bounce back to, that 6,000 range that we were looking at. It might just be a slow bleed from here till March of next year, where we're just in a place of zero liquidity. That's the worst case scenario, right? Because we obviously don't want to see shit like that happen. We want to be able to trade this market. That would be what I would not want to see. But it is something we need to keep an eye on because this is extremely tight. I don't like how that looks one bit. And you can see that on the stochastic RSI on the weekly. This yield is coming from the overbought. And you can see that the MACD is actually looking like it's ready for some bullish momentum, which means that the yields can go absolutely out of whack here. And that might be a sign of short-term debt being offloaded for liquidity. So that's a boring explanation for what we're seeing there. But it is something very important because, again, 2008, 2020, I think 2011 too, which would have been the banking crisis in England or Europe. Things that you kind of have to keep an eye on. And with this OpEx date coming up and volatility looking like crazy, I'm going to pull volatility real quick. The VIX is looking absolutely insane to me right now. You're going to see my chart and you're going to just laugh. VIX pulling it up. Boom. I know. Ugly. That's the weekly. Let's go to the daily. It's a little bit easier to see. There we go. So we got a couple of things going on here. You were putting in resistance here, right? You hit this, came down, hit this, came down. You broke out of it because of time. You can see that the MACD is starting to roll. It's going to probably start putting in some green candles on this volume, and you're going to start to see some of these oscillators kind of push to the upside. Stochastic RSI is extremely oversold. You're within a bull flag. You're trading lower highs, lower lows. You hit the bottom recently. You got the Bollinger Bands kind of coming in. This is why I'm very cautious with what we're seeing right now in the market. This is telling me that, okay, we're juicing these markets and we're pushing it pretty fucking hard, but at some points there might be some type of snap in the market, and the sell in May and go away might actually apply here for the short term. I'm not telling you guys to do that, but there's a lot of things that are just telling me that, we're going to probably see some type of pullback, and it might be very fast. It could be, over 2 weeks we drop 10%. Worst case scenario, we drop 30%, right? That's not what we want to see. But I think a 10% move is very possible in these markets right now, especially for the S&P, the NASDAQ. Looking at the Dow right now, the Dow is probably going to come back to this 36 level. That's where I would expect it. If it's really bad, you're looking at this 34 level. So obviously from where we currently are, 41, it goes to 36, that's a 10% move. If it goes to 34, we're looking at something about 16, 17% move down. Could be worse than that. Again, it's not going to happen overnight, but you're probably going to head in that direction if the market does snap. There's just a lot of things that are pointing, like the oscillators on the MACD for the Dow, completely overbought up here on stochastic RSI. This is the daily. You broke above this. You're testing the top of this Bollinger Band. It's going to probably tighten. The NASDAQ's doing something very similar too on these indicators. The price action is just, filled with tons of gaps to the downside. So, expecting some type of crazy move to the downside does not surprise me one bit. Something else just triggered on my charts. We'll talk about that in a second relating to GameStop. That shows that we're probably going to see some volatility very soon. I know this is very boring stuff, but this is just something that's scaring me right now in this market. And I just can't buy all the bullish narrative. The fact also Jim Cramer hasn't said anything recently kind of scares me because I don't know what he's thinking. I kind of need to know what he's thinking 24/7. But it's the truth. And also here's the Japan chart. This one's funny as shit. So every time this has been resistance line, you've been rejected and you came down pretty hard, right? And then you traded back into it, came down extremely hard. Now you're above it. But I don't buy it, guys. I don't buy it one fucking bit. I think there is something scary coming to Japan. And the fact that they're fighting this the hardest they possibly can, this might be the big one for Japan, where it's like, okay, well, then they're Iceland, they're Greece, and then maybe the U.S. has a few months of, up, small cap, rallies. But this right here, I think this is going to break down at some point. I think this massive gap to the upside that we got up here will be filled at, I don't know if it's before OpEx or after OpEx, but you're really pushing things to the absolute limits of possibilities. The MACD looks like it's going to start curling over fairly soon, which means maybe we have a few days. Stochastic RSI, completely overbought. And, if we're just looking at this, it's basic technical analysis. I would expect us to find this level. If we test this resistance line and it doesn't act as support, then it's actually resistance. And we're probably coming down looking for support, which would be back at 31, which means we'd be here for the third time in a matter of less than 10 months.
All right, let's go to GameStop and then we'll move to crypto from there.
Yeah. All right. GameStop. Who's excited? Because there is some crazy shit going on there too. We just broke out of the trend line. A lot of people right now are saying that we're going to come back to 22 on GameStop. I think that's possible, but I also think that it's not possible because I'm a holder of GameStop and I don't want that to be the scenario. But I will say this about GameStop right now. This is the highest holding of this. The institutions are holding the most amount of GameStop since the squeeze in 2021. We're seeing that teachers' pensions are being fueled with GME. That's fucking insane. Yeah, people are betting big on GME, and it's quiet too. And we're also seeing tons of in the money puts being canceled. I think the other day it was $15 million worth of 95 puts, which would mean that they've been in the money since like about $90 or so. And people are just, selling those and they hit the market. And you're seeing tons of the call premiums, absolutely shoot up and down. This is pushing it to the point where something will happen or something. And here, I'll show you the Bollinger Bands. This is why I'm saying something will happen. On the daily, we're breaking out of this huge triangle, right? This triangle that we've seen since June of 2024. And we're coming up on it. And we're breaking out of it today. And the next trading day is May 12th. And why is that important? Well, if we go to Twitter and see what was the first time Roaring Kitty tweeted back last year, it's right there. It's May 12th. That's fucking insane. Yeah, like that is actually crazy if you have the tinfoil on.
It could also be a coincidence, Kevin. Let's not get too insane here.
I'm not saying that it's going to break out then, but it is absolutely insane that we're seeing May 12th pop up here. It's like, why the fuck did he tweet last year on May 12th, right? And now we're seeing it today. And again, maybe that's investors hedging, and also it's just kind of that coincidence. But also at the same time, it's like, maybe he saw the week of OpEx being a window of weakness and you start to see some of that breakout. And again, GameStop could pop out of this and go to like $30 or so. And we could still get no Roaring Kitty tweet, right? That's kind of the situation. I think he's going to come in when things fail. And that's why I say the bigger market pullback might be the most bullish situation for GameStop, because then if people start exercising some of those in the money call options, then they're going to have to buy back whatever they're shorting, right? And that could cause a lot of pain in the market for GameStop. The other thing too I wanted to share with GameStop is, we're getting close to this triangle ending organically as well, July or so. And so we have the two scenarios where we don't know which path we're going. We don't know if it's going to crash sooner than later. And then we were at, 4,800 this entire summer. And we don't have the greater move to the upside. And then we just kind of collapse later on in the year. Or if we're going to collapse now for 10% and then rally to, kind of the same levels that we're currently at right now. And then we collapse hard, Q4, October-ish levels. So that's kind of what I'm looking at here. The other thing is too, FFAI, the company that we know UBS possibly, again, I don't know for sure because I don't have their balance sheet, but I know that they were buying it when GameStop was actually kind of taking off. This thing had earnings yesterday. It lost $43 million in the last quarter. And this is a company, again, no one's buying necessarily their cars, but it's a good thing it's a fucking Ponzi and it's a hedge, because this thing is only down 0.02 cents today. It's holding strong as GameStop is holding strong. And maybe that's the broader market holding some of these things up. I don't necessarily believe that. I think that there are people who are hedging. I had a FFAI call that I bought. It was 3.5 strike price. Obviously, it's not in the money at all, not even close. And that thing was up like 1,000% today. That's fucking insane. Like, I could have sold that for a massive profit today. I didn't, because I still believe this thing's probably going to go up if GameStop goes up and it's past the window of when I expect GameStop to pump. But looking at this here, it's like there's a lot of things that are just holding strong while the rest of the market is showing some weakness. And it's like, why is this happening? I think it's more positioning than it is necessarily, profit taking. Speaking of which, JP Morgan CFO sells 70% of his
Saw that
JPM. Yeah, last time they did that, it fucking crashed hard, guys. It's not even like 7%, it's 70%. So crazy shit. I'm all out of hot air. Let's talk about something else that has to do with hot air. Let's talk about it. Pull it up right now.
Let's talk about it.
What should we do first, hot air or orange coin?
Let's do orange coin, and then we'll wrap it up with hot air.
Yeah. This guy is definitely helping hot air. Let's put it that way. GameStop, Bitcoin kicking ass, right? I have one concern with Bitcoin. I keep saying GameStop. Fucking obviously, my mind's in the wrong place. Looking at Bitcoin here, I have one concern. I know I text you in house this. It better go above 110 and do it considerably and hold above it. Otherwise, I don't know if we're going to be pushing up higher than that. And that kind of concerns me too. For which scenario are we going to see the 30% move to the downside for broader markets if Bitcoin can't push up past 110? I would say that the chances of that happening are I would say 40%. It's more likely if that's the case, right? If we get this triple top and we're not able to push up higher, so let me mark this here, somewhere around here, right? If we're not able to push above this yellow line and find this as support and climb up higher to like the 120s, 130s, the Mike Alfred levels, then we are in some dangerous territory, I think, for the broader market. Obviously, dominance has allowed a bit of an altcoin rally to, happen. We've seen it pull back a little bit, which is crazy because Bitcoin's still fucking way more than it was last week. But seeing this here, this is a fast move to the upside. If this gets rejected around this level, I think we're in some bad shape for everything, not just Bitcoin, but everything in the broader market. I think that there's a good chance that we actually hit 109 or so this weekend. I wouldn't be surprised if we did, right? The price has been moving very fast. We know that there's been a lot of USDT prints, which maybe that's Michael Saylor issuing some convertible bonds on MicroStrategy to raise funds to throw it back in there. I think Michael Saylor is actually a bigger fan of Tether than he is of Bitcoin. Let's be honest here. But seeing how this is playing out, I wouldn't be surprised if we hit this in the next few days, right? The 109, 110. People keep trying to short it. I don't know why. It's just pushing the price up a lot faster too. It's the dumbest thing I've ever seen. Sometimes the best move or the best trade is no trade and just wait for things to happen, right? Like, I think that is honestly the best trade here. I'm not going to buy Bitcoin at 103. If it was at 88 or so, possibly that's where I thought it was going to pull back to, but it didn't. It's pushing up. So that kind of scares me that we might get, triple top. But we could also be here in a month and say, oh, no, it's a quadruple top. So it's really going to be how we take it in terms of how the market reacts to, say, some type of catastrophic event, market pullback. You might see Bitcoin and crypto be the flight to safety trade. And I could have been wrong this whole time. Again, I think debt markets lend the fact that money is going to be needed more than it's not going to be. And you can kind of throw stuff away into these inflation-proof assets or these tariff-proof assets like we were talking about earlier, Bitcoin, Fartcoin. But that's just a thought, right? So this is my warning, 109, 110. I think we are going to get there. You got to break above it. If you don't break above it and start climbing above that, then you might see a lot of profit taking somewhere around there. So just my thoughts. Do you have any thoughts on Bitcoin?
No, I think you covered it well on the technical side. I mean, I think there's a lot of positives right now as far as it being more accepted. We're moving toward where now banks can custody crypto. I think that's another, check in the side of we're in a bull market for crypto, and maybe this is the last big crypto bull market. Like, that is not out of the realm of possibility. Like, I'm not saying there won't be more in the future, but like maybe this could be like the chance to really make it. And so like I'm just gonna sit comfortably in my positions. It's Bitcoin, it's Fartcoin. I don't really have any more ETH. And I'm not really feeling any FOMO for that. Like I'm comfy where I'm at right now. But let's wrap it up for the week by looking at one of the best charts. It's just so beautiful. Look at this thing. I mean,
it's so crazy.
God.
This chart is so crazy because it fucks my wave counts every single time. And it just surprises me. And again, I'm not upset that Fartcoin's going up, right? All this crazy shit that's happening, like this is the type of stuff that I would expect to be going up. It's the low market caps. People are speculating. They're excited. Trump told everyone to buy everything in, under the sun yesterday. And I'm just trying to find where the market, where the value is and seeing how many wave counts and everything. Because I do expect a greater pullback. Maybe that's coming at a later time, but I expect some type of pullback, and that's where I probably will get in. I got a fucking really good pullback the other day. I went to 90 cents. I didn't get in
90. Yeah. It was like chilling at 95 for a little bit, and everyone was like, oh, here it goes. It's going to 60. And then boom, here we are at $1.33.
I know. I'm happy that it did like a quick move too, because then it kind of tells you it's like, all right, it's probably not going to come back down to there, or if it does come back down to there, it's probably smart to buy some levels, right? I was considering it. I was like, should I do it at 95? Didn't. I waited too long. I threw it into UVIX instead. But looking here, I think this is absolutely insane how much is pushed up. It also shows you how much demand there is too, right? So if we do get the liquidity pump that we expect into the summer, and again, I say expect, I'm only like 60% expecting it now, based off of what the Fed's doing with some of the stealth QE and also what Bitcoin's doing. So it's kind of like a tug of war there to see what happens. But if we do get that liquidity pump, if there is a pullback down here, I still believe that we're probably going to go see this thing, $5. That's just a crazy guess, but I think that there is enough FOMO, people excited about the markets coming back, bouncing, people wanting to buy the dip. There's a good chance that you could see this thing just squeeze. And if it does, who cares, right? And maybe what it does is create a greater cup for a greater handle someday. And we see this thing go to
the greatest cup and the greatest handle you've ever seen.
Yeah. So, that's, and maybe that's something that we need to create, and we'll just create our own, like, I don't know, it'll be like the Jweb or the the MNS fart index or something like that. It'd be amazing. And that's how we gauge whether this is going to create the greatest cup and the greatest handle ever. But like I said, if it does come down, boohoo, I'll probably buy some more buy some to get in. And if it doesn't, then, good luck, guys. You're probably looking at 273, and maybe that's where you find some resistance before, and the next pullback will come somewhere up there. Crazy thing for me to say, right? 273 might be the next level if it just continues to pump straight up. But
I'm still viewing this as this cycle's Shiba Inu coin.
It is 100%.
And with it not even being listed on Coinbase yet, like I had a buddy who was texting me about it, and he was like, how do I buy this thing? He's like, why can't I buy it on Coinbase? I'm like, well, you got to move USDC or Sol over to your Phantom wallet and then go to Jupiter Exchange. And he's like, I'll just wait until it's on Coinbase to buy it. And I think that's actually a pretty common sentiment at the moment. So I do think that there is, if it can approach those all-time highs even before a Coinbase listing, then I think that we are set up for Fartcoin to go to $5, even $10.
I will say this: there could be a 50% drawback in alts. It's very possible. Yeah. Fartcoin could happen to drop 50% too. But then you'll probably get a Coinbase listing or talks of Kraken or someone doing it. And Robinhood might be the one to do it.
I think it's on Kraken already, but getting it on Coinbase and on Robinhood is, I think, the real catalyst.
Yeah, if that's the case, then you're probably going to see that thing just V-shaped recovery. That's my personal opinion, especially if it pulls back a good amount too. They open up the floodgates on that. That might be your ticket out of, I don't know,
out of the hood.
Trump, out of the hood. Sure. All right, I'm good with that.
All right, we're going to wrap it up on that note. Appreciate everyone who joined us today. Sorry for any connection issues. If you've not yet, like the stream, subscribe to the channel, drop some comments, buy some Fartcoin. Have a great weekend, everybody. We appreciate you being here with us. Have fun, enjoy it. The weather's beautiful out. It's a great time of year to get off the screen, go touch some grass, go smoke some grass, whatever it may be. See y'all on Monday.
Oh, I'm trying to do the Rick James. Give it to me.